The Inland Revenue Board has identified around 80,000 taxpayers with unexplained extraordinary wealth. These taxpayers, which comprise companies and individuals, came under the IRB's radar thanks to their public display of luxury goods, jewellery, handbags or property in their possession. IRB Chief Executive Officer Dato Sri Sabin Samita says the board set up a task force last September to scrutinise and investigate those with accumulated undeclared assets. They have been requested to furnish the IRB with their source of funds to finance the purchases. Sabin adds that individuals who conduct online businesses using social media would also be under scrutiny. This doesn't mean that the IRB is going to check individual social media accounts for lavish lifestyles flaunted. Sabin says no one will be in trouble as long as these individuals can explain the source of their wealth and if they're paying 100,000 ringgit in taxes every year. Digital currencies and tokens will be regulated by the Securities Commission starting tomorrow, when the Capital Markets and Services Prescription of Securities, Digital Currency and Digital Token Order 2019 comes into effect. Finance Minister Lim Guan Eng says this means the offering of such assets, as well as its associated activities, will require authorization from the SC and need to comply with the relevant securities laws and regulations. The SC will also put in place a regulatory framework for the issuance of initial coin offerings and the trading of digital assets by the end of the first quarter of 2019. Any person offering an ICO or operating a digital asset exchange without SC's approval may be punished upon conviction with jail time not exceeding 10 years, as well as a fine of not more than 10 million ringgit. Lim says the MOF views digital assets as well as its underlying blockchain technologies as having the potential to bring about innovation in both old and new industries. In particular, he says digital assets have a role to play as an alternative fundraising avenue for entrepreneurs and new businesses and an alternate asset class for investors. Independent power producers are bound to get the short end of the stick as Malaysia moves towards renewable energy. Domestic power demand is expected to continue growing, and Putrajaya has said that it wants more renewable energy and transmission and distribution players to meet this demand. But Hong Leong Investment Bank research says Putrajaya's ambition of increasing its power generation mix from renewable energy to 20% by 2025 means that the outlook may not be as bright for IPPs. Analyst Daniel Wong, who is overweight on the power sector, points out that more solar power projects are expected in the coming years, partially to replace outgoing power plants. This is given the limited potential of new large-scale hydropower plants in Peninsular Malaysia. As such, Wong says large IPPs face potentially lower capacity replacement for their expiring power purchase agreements. Generally though, he remains upbeat on the overall power sector, given its earnings and dividend sustainability in times of increasing market uncertainty this year. He has a buy call for TNB and YTL Power International, with unchanged target prices of 16 ringgit 40 cent for the national utility giant and 1 ringgit 25 for the IPP. TNB ended trading today unchanged at 13 ringgit 86, while YTL Power International closed 0.56% lower at 88 cent. The KL High Court will hear on April 4th an application by ex-Prime Minister Dato Sri Najib and his wife Datin Sri Rosmah Mansor to strike out a 676 million ringgit lawsuit by controversial carpet merchant Deepak Jaikishan. Deepak is accusing the couple and two other parties, Bousted Holdings and its unit Bhakti Wira Development, of conspiring to defraud him in a property deal involving 3 parcels of land measuring 223 acres in Bukit Raja Klang. The plot was to be the site of the National Defence Studies Centre, which was supposed to be built in 2007. This had purportedly caused Deepak's company major losses, which led to him being forced to sell 80% of his shares in the company to Bousted via Bhakti Wira Development. He is seeking 600 million ringgit in general damages, 50 million ringgit in exemplary damages, 26 million ringgit in aggravated damages, costs and other relief deemed fit by the court. All four parties filed their individual applications to strike out Deepak's suit last month, with today fixed for case management. Scomi Group's share price came under pressure today after its 65% owned subsidiary Scomi Energy Services revealed it is probing a 64.33 million ringgit loan made to the former. At the close, the counter stood at 5.5 cents, down by over 15%, with 1.57 million shares exchanging hands, giving it a market capitalization of 52.8 million ringgit. As for Scomi Energy, its shares were unchanged at 5 cents. Last Friday, Scomi Energy told the stock exchange its board has commenced the said investigation as the advances were made without board approval. They had also been made without prior approval by its audit committee, which is still unable to provide a statement as to whether the provisions were fair and reasonable or to the detriment of the company and its shareholders. These advances dragged Scomi Energy into deeper financial woes, as Scomi Group has not been able to repay the outstanding amount. Scomi Energy's board is now reviewing its management structure and terminating the shared services arrangement between itself and the parent company, bar certain critical functions. Scomi Energy is also ensuring that the Chief Financial Officer is directly accountable to the board to report on all material matters, including any proposed related party transactions.